UK versus Europe economic crisis. Who's really struggling more in 2025? Welcome back to Dr. Dan's channel. Today we're doing something simple but uncomfortable. Comparing economic reality, not political narratives, across the UK and the Eurozone in 2025. Because in the last year something unusual has happened. Britain, long treated as Europe's cautionary tale, is still struggling with stubborn inflation, housing pressure, and public services under strain. But Germany, the region's industrial heavyweight, has stalled. Growth has hit 0%, and the consequences don't stay inside Germany. They echo across the entire Eurozone. So the question isn't who looks worse on social media. It's who is actually doing worse in the data and in daily life. We're going to walk through cost of living, industry and competitiveness, housing and construction demographics, growth and productivity, healthcare and public services, political and social stability, and finally, the real-world indicator that cuts through everything: migration of talent. Let's begin where most people feel the economy first: at the checkout, on the rent bill, and on the energy meter. 1. Cost of living, inflation versus pressure. By late 2025, UK inflation is hovering around 3.6%, not the double-digit chaos of the early 2020s, but still high enough to keep households tense. The Eurozone average is lower, around 2.3%. But headline inflation can mislead. The lived experience is shaped by what stays expensive: services, rents, and debt costs. In the UK, core and services inflation remains stubborn, especially in rent-heavy cities and commuter zones. Wages did rise in some sectors, in 2024 and 2025, roughly 5 to 6% in parts of the UK economy, but the purchasing power doesn't always feel like it improved. People are earning more, yet still feeling boxed in. In the Eurozone, some households see lower inflation, but face a different frustration: wages moving slowly while housing and everyday costs climb anyway. The pressure is quieter, but persistent. The UK has an additional stress amplifier: the mortgage structure. With rates higher for longer, many households renewing fixed mortgages face monthly jumps of $300, $400, even $500. That's not just inflation, it's a balance sheet shock. Verdict on cost of living. In day-to-day strain, the UK is worse in 2025 because the combination of higher inflation and mortgage resets hits households directly and rapidly. 2. Industry. Germany's stall versus Britain's thin base. Now we move to the backbone of long-term prosperity: producing things the world wants. For decades, Europe had a division of labor. Germany anchored manufacturing and exports, the UK leaned heavily on services. In 2025, the German side of that model is under severe stress. Germany posted 0% GDP growth, flat. That matters because German manufacturing is not a side business, it is the centerpiece. When it stalls, the Eurozone's core engine loses momentum. Why the stall? A mix of structural exposure, energy costs after the break with cheap Russian gas weakening external demand, especially the reliance on China for high-end exports, regulatory and permitting complexity, and rising global competition in key sectors like autos, chemicals, and machinery. A visible symbol: major firms scaling down domestic production while expanding abroad, including the example raised in the transcript of BASF shifting activity away from Germany and building capacity in China. In the UK, manufacturing has weakened too. Output fell about 1.0% in late 2025, but the UK economy is less manufacturing dependent. In Q3 2025, the UK still recorded 0.1% growth. Tiny, but not zero. The UK's service-heavy structure creates flexibility in some areas. Exports of legal, financial, and business services can remain resilient, but also leaves a vulnerability: limited capacity to rapidly scale domestic production in a disruption. Verdict on industry: Germany, and therefore the Eurozone, is worse off. A stall in the region's manufacturing anchor is a structural threat, not just a weak quarter. 3. Housing, scarcity versus construction. Freeze housing is where economic stress becomes personal. In the UK, the core problem is long-term shortage. a multi-decade gap between household formation and new building. That produces chronic pressure on rents and prices. In the Eurozone, the pattern varies by country, but a major theme in 2024-2025 is a construction slowdown linked to high borrowing costs and weak developer economics. Germany saw residential construction permits fall by about 26% over 2024-2025. That's a major signal. Future supply is being cut off. In Ireland, the transcript highlights Dublin as a standout case, where housing costs make London look manageable. Whether it's workers leaving, couch surfing, or overcrowding, the core issue is the same: demand overwhelming supply. Rent control policies in some European cities change the shape of the crisis, sometimes reducing measured rent increases for sitting tenants, but also shrinking available supply, pushing scarcity into informal side payments, long searches, and limited mobility. Verdict on housing. It's not a clean win for either side. The UK faces persistent undersupply. Parts of the EU face a sudden investment and construction slowdown. The outcomes converge: high rents, low mobility, and pressure on young households. 4. Demographics, growth constraints versus population pressure. Now the slow-moving factor that changes everything: population structure. In 2025, Southern Europe faces severe demographic stress. The transcript cites Italy's fertility rate at 1.13, an extreme low. That reshapes growth prospects, public finance, and labor supply. A key point raised in the transcript: Italy briefly overtook the UK in GDP per capita. But this can be influenced by population shrinkage. GDP divided by fewer people can rise even without broad-based prosperity improving. Germany faces a separate demographic challenge: maintaining the workforce. The transcript states Germany needs 400,000 skilled immigrants per year just to sustain capacity, a large number with real political and administrative constraints. The UK's population continues to grow, with immigration remaining historically high even after Brexit. That growth supports labor supply and consumption, but it also adds pressure to housing, healthcare, transport, and local services if infrastructure doesn't scale. The transcript also cites youth unemployment differences: Spain near 25%, UK around 15%. For young workers, those gaps translate into real divergence in opportunity. Verdict on demographics. On long-term structural risk, much of the Eurozone, especially Southern Europe and Germany, faces deeper constraints. The UK's challenges are more about capacity and infrastructure catching up to population pressures. 5. GDP in the growth debate. GDP is imperfect, but it still signals momentum. The transcript cites UK growth forecast upgraded to around 1.5%, Germany forecast around zero growth. The difference matters because stagnation in the Eurozone's anchor economy tends to ripple outward through trade, investment, and confidence. The UK's growth is not impressive, but it is movement. Much of it is service-driven, and that can be resilient in the short term, though less reliable for rebuilding productive capacity. Verdict on growth. The UK edges ahead in 2025, but neither outcome is strong. The key distinction is Germany's lack of momentum in an economy designed to export and scale industrial output. 6. Healthcare and public services. This is where public confidence often rises or collapses. In the UK, the transcript highlights NHS waiting lists hovering near 7.5 million in late 2025, and the emergence of a more visible two-track reality. Those who can pay go private. Others wait. A vivid example appears in the comments: a patient waiting 15 months for a hip replacement, with knock-on costs for labor supply and household income. In Europe, healthcare usually functions through social insurance models. Access can be faster in parts of Germany than in the UK, but the costs are rising sharply. The transcript notes German contributions hitting record highs in 2025, driven by aging populations and financing pressures. France's rural doctor shortages are another structural stress. Coverage exists on paper, but access becomes uneven. Verdict on healthcare. The UK looks worse in lived experience because access delays become the defining feature. In parts of Europe, access often remains faster, but the financing burden is rising. 7. Social and political temperature. Economic stress doesn't stay economic. In the UK, the mood in 2025 is often described as fatigue and low trust. People skeptical that any government can reverse long-running constraints quickly. In parts of the EU, the transcript emphasizes higher political volatility. Increased support for hard-right and anti-establishment parties, energy grievances, migration backlash, and visible protest movements, including farmer protests and broader conflict over green policy costs. Verdict on stability. The Eurozone faces more visible political fragmentation risk in multiple major states. The UK faces deep dissatisfaction, but the system appears less structurally threatened. 8. The brain drain. The most revealing comparison. Now the indicator that quietly settles the argument: where skilled people go. The transcript compares tech salaries. London senior dev, 80k Kai Berlin, 75k, Austin, 180k plus stock. That gap has widened into something that reshapes migration decisions, not just lifestyle choices. The transcript also contrasts medical pay. UK junior doctor, about 32k US resident, about 60k PAS US fully qualified doctors, 250k minimum. Whether every detail holds universally across specialties, the direction is consistent. Compensation differentials are powerful pull factors. The UK has one advantage: English language and relatively flexible global talent routes compared to many European labor markets. But it also loses domestic talent. The EU faces a double challenge. Language barriers and labor market rigidities can make it harder to attract and retain globally mobile high-skill workers at scale, especially when the US offers higher pay and faster career upside. Verdict on brain drain: both lose. The US remains the dominant magnet for high-skill labor in this period. Final verdict: who's actually doing worse? So what's the answer? If we define worse as daily living stress, bills, housing, public services, the UK often feels worse in 2025 because inflation is higher, mortgage shocks are sharper, and healthcare access anxiety is constant. If we define worse as long-term structural weakness, the ability to sustain productivity, exports, and workforce, the Eurozone's outlook, particularly Germany's, looks more concerning because industrial stagnation and demographic constraints are deeply hard to reverse. So the conclusion is not one is fine. It's this: the UK's pressures are more immediate and household-facing. The Eurozone's pressures are more structural and system-level. Thanks for watching Dr. Dan's channel. If you found this comparison useful, hit like, subscribe, and turn on notifications, because we're going to keep tracking the real data behind the headlines. And tell me in the comments, where are you living right now? The UK, Germany, Ireland, Spain, and what's the single biggest pressure you feel day to day? See you in the next one.